Welcome to Biztech's Technology Show. Our guest for today is Oliver Rajic. He's the Chief Growth Officer and General Manager APAC for PPRO. PPRO is a fintech company that provides digital payments infrastructure to businesses and banks. Now, to tell us more about it, welcome to the show, Oliver.
Thank you for having me.
Now, Oliver, for a start, could you just give us an overview of PPRO?
Here's some fascinating statistics. 1.3 million merchants are powered by PPRO, which is quite significant. Almost 10% of New Zealand's GDP runs through PPRO's technology. Over 100 of the largest payment processors and payment solution providers, whether it's Square, Stripe, JP Morgan, Citibank, PayPal, Checkout.com, are leveraging the PPRO technology. We are almost the biggest company you've never heard of and are simplifying how people run their digital payment businesses as their underlying infrastructure.
Okay, now before I get more into PPRO, I want to look at your interesting background because, Oliver, before you were part of PPRO, you co-founded and headed up Alpha Fintech, which was then acquired. Tell us about your journey at Alpha Fintech and how you filled the gap, which then attracted PPRO to buy you.
You know, spotting trends, especially for FIs, is difficult. Whether I'm a large bank or payment solution provider, usually I like to be a fast follower. If you think about it, imagine 10 years ago when we discussed the API and how late some banks were to the API, but it was inevitable. The same thing with cloud technology, whether should we use the cloud, is the cloud safe? And even still, some banks today don't run on the cloud, even though it's inevitable. So the same thing is right now happening what we saw with platforms. Platforms for FIs and users to build products on top of. The old way how banks used to build solutions is they would buy licenses, they would deploy an army of people, and they would think that they have to build the latest and greatest platform in the world. That is absolutely and unequivocally wrong. I don't care how strong that sounds, that is wrong. Because it takes years and millions. And at the rate of change of technology, if it takes you 3 to 5 years to have today's solution ready, then 3 to 5 years from now, you're already 3 to 5 years behind. And you're constantly playing catch up. So what this new era of platforms are is solutions that allows product providers to build their products on top of. So rather than building platforms, they're using platforms to build product. And they can do that faster, cheaper, easier with a more diverse solution set. So what we said, hey, you know what? We want to build this managed platform, this managed service for banks so that they can start competing with the Stripes and Adyen's of this world, because payment processing and payment acquiring is the new hot buzzword. It is what drives commerce, what drives money, what feeds into loans, what feeds into data. And the old way of let me contact the biggest payment processor in the world, let me get the biggest payment gateway in the world, is just not sufficient, is dead. And the data proves it. Stripe is crushing everybody, Adyen is crushing everybody. All these new acquirers are taking market share away. So we built a platform that allowed these banks and solution providers to access more product without occupying their IT resources and design a vaster solution set than they could have done otherwise, because otherwise it's 3 to 5 years and millions of dollars to be able to have something.
And so then, what then was the catalyst for the acquisition, and how has PPRO taken that forward post-acquisition?
So PPRO itself was the infrastructure for global payment methods. So while most of us are familiar with Visa and MasterCard, the majority of the world does not pay with Visa and MasterCard in certain regions. Think of Alipay that everybody's familiar with, Google Pay and Apple Pay, but there's hundreds of these payment methods. Much more importantly, there's a lot more popping up on them, whether it's real-time payments, whether it's P2P payments in Singapore, where you see it with PayNow and PayLah, whether it's real-time payments popping up in Australia soon with MPP, whether it's local payment methods in Thailand, in Malaysia, and Indonesia. So what PPRO did is not just provide a technological connection to these solutions, but simplified to provide one contract so that if I'm a bank or I'm a payment gateway, and I've got thousands of merchants, I can now provide you access to hundreds of payment methods. So if you get a global buyer from the Netherlands, from Europe, from Japan, from Australia, they can pay in their preferred payment method. Now, what they had accomplished was quite outstanding in that literally almost all the large payment companies said, hey, why would I build my own power plant and run it? Why reinvent the wheel? I'm going to give this to PPRO. They will manage the licensing, the funding, and the money, and they're great at that. But needs evolve. Needs are different now because there's more variety of customers. So these banks and FI said, hey, can you help me on the risk side, on the onboarding side? How do I onboard merchants faster? How can I run my entire merchant acquiring infrastructure? How can I do faster KYC, AML? How can I do better fund management, better reconciliation? How can I do, which is now the hottest topic in payments anywhere in the world, payment orchestration or service orchestration? So the banks and the FI said, I'm understanding you providing me a core feature, but there's a lot more requirements that are coming up. PPRO, how can you help me with that? And that's where PPRO said, hey, rather than us building and reinventing the wheel and spending 3 to 5 years and millions of dollars doing so, by adding Alpha into our solution portfolio, we provide a one-stop shop, an industrial strength app store where I, as a bank, can plug in. I get every payment method, every third-party fraud solution, KYC, AML, acquiring. It's a one-stop shop, connectivity as a service, so that I don't have to occupy my resources, and they can build now products across the entire solution lifecycle. A one-stop shop in an industrial strength platform.
So this is your new orchestration layer that you've just rolled out. So as you said, and let me just repeat that so the audience understands it. What it does, to simply put, you unite hundreds of payment acquiring and risk products from different providers. So for me as a customer, as a bank, I can then deploy this and scale through this one connection.
Correct.
Have I summarized that correctly?
Correct. So let me touch upon orchestration. And let me make sure that anybody who's listening appreciates the scale and gravity of what's about to happen. It is the most disruptive solution approach in our entire industry. As the APIs disrupted how business was done, as the cloud disrupted how business is done, so will orchestration. How so? Imagine if you never have to send out an RFP again. Think about the impact an RFP has. First off, how many resources are you losing to vet 5, 10 providers? How much time? Then how much do you need to go through the contracts? Once you've picked one provider, once you've signed one contract, now you need to integrate them. And now you're stuck with one provider for years. What if there's a new technology that's out? What if there's a better technology? So you lose time and money and competitiveness. The orchestration layer removes all that friction, that you never, ever have to send out another RFP again, that you never have to waste the resources and in time. Instead of selecting one fraud solution provider, now you have a la carte 5, 6, 7, 8, 9, 10. And if the one you want is not there, you can add them quickly. So you have 11 and 12. You no longer have to sign 5-year contracts. Everything is a SaaS agreement. If you're not happy with that provider, the orchestration layer allows you to swap out one provider for the other by the click of a button, so you don't need to occupy your IT team. If a new innovation comes in and you just want to use a component, so you want to use 80% of one solution and 20% of the other, you can do that via the click of a button. So what I'm saying right now is you never have to be dependent on one provider again. You never have to send an RFP again. You can access new innovations quickly. You can replace them just as easily. And the power of negotiation is now with you because everybody has to compete for your business. More product, less effort.
Okay. All this sounds great, Oliver, on paper. Give us some examples of how you've actually helped clients in Asia Pacific.
Okay. Let's take Bank of New Zealand. Bank of New Zealand is the first bank across all of Southeast Asia that migrated a mission-critical platform to the cloud. $40 billion worth of volume. Actually, sorry, $20 billion worth of volume across 40,000 merchants. And what that did for them, it increased their profitability. It simplified how they work with customers and release new products. It provided them new insights and data, and is allowing and positioning them to upsell and cross-sell numerous other products. Cost savings, profitability, more solutions to upsell and cross-sell, and a migration to the cloud. Now, let me stress that first point again. How many other banks have migrated their mission-critical platforms into the cloud? Now, you read them about, we are working with Azure and Google, sure, on your email servers and some other secondary sites, but mission-critical stuff? Not just that, right now, I'm not sure if I'm allowed to say who it is, but one of the world's largest bank, one of the 5 largest banks, headquartered in Asia, has signed a contract with us to re-enter merchant acquiring worldwide, where we'll be able to meet local data hosting requirements, where we'll be able to provide one solution worldwide, where within 12 weeks, they went live for one country. So a global multinational bank is able to re-enter payment processing and merchant acquiring faster and cheaper with a more competitive product set like Adyen and Stripe, which without us simply is not possible. Faster, cheaper, vaster product set to compete with the likes of Adyen and Stripe.
Okay, so do you know where you got me? You got me when you said 12 weeks, because I'm from the enterprise technology space, and I know that these things take forever. So 12 weeks, is it from sign off to live, or what is your definition of the 12 weeks?
So the way we define the 12 weeks, and we try to stick by it, is that we connect to a new product or a new platform and embed it and enable it within 12 weeks. So what this bank has, they have 12 different countries, they have 12 different legacy platforms and APIs. So whether it's Hong Kong, Australia, Singapore, Indonesia, India, for each country, if I'm a multinational company provider, there's no alignment. 12 countries, all the data is in different formats. It's you've got 10 fingers and not 2 fists, really, to sum it up. So the first phase of the project is for us to consolidate all of those 12 platforms into one, so that it's easier from a multinational merchant to upsell or cross-sell, that I have a standardized solution and better data. Now, what we basically do then is it takes us 12 weeks to set up any new platform and any new solution. So in a matter of, it takes us 12 weeks to take these hundreds of APIs, standardize it into one, to take these numerous reports, standardize it into one, to take these different interfaces and processes, to standardize it into one. And if I'm a new customer right now, also have immediate access to these hundreds of solutions that we have. So integration 12 weeks, standardization 12 weeks, all the same 12 weeks, not additional 12 weeks. And then I've entered this solution super mall that allows me now to upsell and cross-sell whatever I want.
Okay, so Oliver, which brings to an interesting question here. If I'm a smaller bank running legacy mainframe solutions, I'm in Philippines, I'm in Vietnam, I'm in Indonesia, I'm in Thailand, perhaps, and I haven't invested as much. I've probably done digital transformation in the peripherals. How will you be able to help me get on board quickly with my legacy systems?
Actually, those are our favorite customers. I'm going to tell you about a customer called Novati in Australia and New Zealand. I'm going to tell you about them is because they're on the Australian Stock Exchange. They've just received their banking licenses in Australia. So they're a new bank. It's not that they have mainframe, but they're a new bank. And that their shopping list to enter acquiring is massive. So through us right now, we provided them the entire platform and infrastructure to run a business on top of. They have KYC AML tools to onboard customers quicker. They have a new payment gateway of choice, not that we gave them, but of choice. A new acquiring backend where we loaded the Visa and MasterCard licenses within a 6-month span for Australia and New Zealand. They have chargeback tools, fraud tools, loyalty solutions for e-commerce and point of sale, new business intelligence solutions, And all of that is configured and customized. So it's not one size fits all. It's they go to the tool set and say, hey, we don't want fraud solution A, we want fraud solution B. And I see you have this chargeback solution, but we want a completely different one. Can you please integrate it? So they went live with a completely end-to-end solution where we went customized numerous new products for e-commerce and point of sale, where it's hosted in country within Azure on a PCI compliant environment within 6 months. They now can compete with the world's largest acquirer without occupying their resources and have a product to configure versus an entire platform to maintain and run and tax their entire resources, which could be deployed on other differentiated products and solution lines. For banks in Thailand and Indonesia and in the Philippines, you can do the exact same. You do not need to host it yourself. Use a platform to build a product on top of. You can migrate and quickly launch a new solution within 3 to 6 months. You don't have to go to the legacy old guard that will take 2 to 3 years and cost you $20 million. If the world's largest bank, the world's largest regional bank in New Zealand, business bank, and if the young startups can do it, so can you. If your chief architect tells you, let's build it in 3 to 5 years, throw them out of the room because you don't have to. It's right there within 3 to 6 months. There's really no need to.
So, Ollie, one of the key things as you've been explaining this, which came to mind was the fact that if I'm a financial services company, so I'm in ASEAN, I perhaps just underwrite car loans. This could be new opportunities in terms of revenue that completely opens up my business.
Absolutely. So where, especially in Asia, they're the biggest culprits of this, is that they have neglected payment processing and merchant acquiring. Now, especially if you look at Thailand, Philippines, even Singapore is guilty of this. Malaysia, it has been sitting somewhere in the corner of the bank. Traditionally, what's happened is, and every bank can now perk up because the majority of them are culprits, is 20, 30 years ago, they bought an issuing platform. And when they bought that issuing platform, attached to it came an acquiring solution. So the first mistake, which is a massive error and will bleed them money, is that merchant acquiring that's for businesses runs and sits with the issuing group, the consumer group, which makes zero sense. Now, most of them right now then run that merchant acquiring business by, hey, a race to the bottom. How can I be cheaper because I'm competing with everybody else and there's no money to be made? I have spoken to dozens of banks across all of Southeast Asia, and I can't tell you how wrong they are about that there's no money to be made there. That's true. The way you're running merchant acquiring, there is no money to be made. But how is it possible that Adyen, Stripe, Checkout.com, Square, how is it possible that they are profitable in payment processing for large multinationals and for small ones, and you're not? How is it possible that more and more money is flowing back into payment processing and merchant acquiring, and they're making money and you're not? That's the question you should be asking yourself. So it's not that there's not money in merchant acquiring, it's that you are not making that money because you are wrong about how you're approaching that. Now, what's the mistake that they are doing? Payment processing and merchant acquiring, the reason why everybody is re-entering it is powerful data within there. You know how your customer is growing, whom they're selling to, how they're selling to, how cyclical it is. You control their funds and their money and their daily livelihood. You will have credit underwritten them already. That is a goldmine foundation to upsell and cross-sell them business loans. Hey, I see you've been growing your business over the last 20%. Why don't we help you grow your business through a business loan and maybe also add some FX product in that because you're selling to China and to Australia? Hey, I see you have these part-time workers. Why don't you pay them via a card where the funds land in there as well? This is where BNZ was brilliant, because what they said, hey, merchant acquiring is my least revenue generator, but that $1 in merchant acquiring generates $5 across all my other corporate banking groups. Now, let me go back to the first point that I made. $1 in merchant acquiring, $5 across corporate banking. But do you care if merchant acquiring is with the consumer issuing group? Do you care that you can cross-sell across corporate banks? No. So you're in the wrong group. If you're in the right group, is your platform set up to upsell and cross-sell all these other products? Does it have the solution to customize for all these unique requirements? If the answer to that, all of that is no, that's why you're in a losing business.
Now, Oliver, that sounds fascinating. What then lies ahead for PPRO in the coming year? Because obviously you're doing a lot of exciting, innovative stuff, but we're coming up to the end of 2022. What's next in 2023?
We've all seen the carnage that's happening in payments and fintech. There's no secret about it. There's layoffs everywhere, and there's complete strategy shifts. Now, this is happening because money was free. People were hiring like there was no tomorrow. And everybody thought, I will just build an army of developers and build and own everything. That time is dead. It's dead because now it's about profit margin and profitability and making sure that every resource is optimized right. For us, for PPRO, that is phenomenal time. And the reason why is because now it's time to divide and conquer. Now budgets are tight, resources are limited. And in order to do so, what you really need to access as many products and process as quickly with new solutions as you can is a platform you can plug into. So the usual overly large chief architect who wants to build the latest and greatest platform, let me hire 1,000 developers and burn through gajillions, that time is dead. You have a limited budget, but you need more product. Competitors are more than ever. How do you compete? By plugging into a platform that gives you more products, frees up your resources, where the ROI is immediate and the total cost of ownership is little. So PPRO is prime positioned for this current crisis that we're all going through, because with these tight budgets, going back to what I said, there is no solution that is cheaper, will provide you more product and more solution, is industrial strength and trusted by over 1.5 million merchants and over 100 of the largest banks and payment service providers worldwide.
Oliver, it's been a fascinating conversation. I really learned a lot. Thank you very much for taking your time to be on the show.
Thank you for having me.
I'm Brian Fernandez, and we've been speaking to Oliver Rajic, the Chief Growth Officer and General Manager APAC for PPRO on Biztechasia Show. I'm Brian. This video will be on our website, www.biztech.asia, as well as our social media platforms. It'll also be on our syndication partners, TV stations, radio stations, and websites. Thanks a lot for tuning in.